How's everybody doing? Back for another video. I want to talk to you guys about three big reasons why everybody should have cash reserves. And before I jump into it, I was thinking about this. I was looking at a lot of the clients that we've worked with over the past 15 years. And I'm also looking at a lot of people that I know that are in business that are doing extremely well. They're making $10 million or more in their business. And some of the things that I've seen, especially in 2024, as the economy started to take a dip with inflation and just all kinds of things that were happening, was that a lot of businesses were going under. A lot of businesses were struggling. A lot of businesses were suffering. But there were businesses that quietly were not going through any of those situations. There were businesses that quietly were thriving in 2024. And a lot of these people that were clients of ours that were thriving, and even people that aren't clients that I've had conversations with, I noticed one big thing. A lot of them managed their money well, and they had cash reserves that they could pull from, because this year was a really tough year. A lot of people had to make tough decisions in their business. You might have had to lay off certain people in your company that you didn't want to because your sales were going down. You might have had to make very, very tough decisions. But these things are things that, unfortunately, as entrepreneurs, we have to go through, because we've been spoiled, y'all. If you think about it, the past 15 years, we haven't had a bad economy. And when I say a bad economy, meaning the last time that we actually had turmoil in this country of the United States when it came to the economy was that 2007, 2008, 2009 timeframe. And ever since then, the economy has stayed steady. It hasn't really been that bad. And we were expecting the economy to take a huge hit in 2020 whenever COVID happened. But because the government reacted in the way of, they gave out stimulus checks to families, they gave PPP loans to businesses, they gave EIDL loans to businesses as well. And the state of California, and I'm sure other states did things like the EDD, right, where they're giving out unemployment. There was so much money circulating that we didn't really experience a downturn until 2023, 2024. And, you know, I think for a lot of us in 2020, whenever COVID happened, we thought, man, this is going to be extremely bad. We're going to experience a lot of turmoil. But when it didn't happen immediately, we were like, oh, okay, we're in the clear, we're good. And one of the things that I spoke about privately and even on my Instagram stories and on my Instagram account was, I was saying back then, all this money is being pumped into the economy, everything is good, but what's going to happen once that money is gone? There were a lot of businesses that grew artificially, including mine, because there were people that had disposable income that they were spending on businesses. And think about it like this as well. There were many people, right? We couldn't go anywhere. In 2020 and 2021, the majority of states had lockdown, where we literally couldn't travel. We couldn't go to restaurants. We couldn't do certain things unless you were in states like Texas and Georgia, right? And Florida. That's a different story. There were a lot of states that didn't allow you to go anywhere, and you had money that was coming from the government. You were still working your jobs, hopefully, from home. And so now your money that you're spending, instead of spending it on dining out, instead of spending it on trips, instead of spending it on entertainment like concerts, we're buying things online. So a lot of online businesses, a lot of online retailers, e-commerce boutiques, everything saw an acceleration of growth. But that was artificial because there was a lot of money that was being pumped into the economy that wasn't there regularly. So as I'm seeing this play out, I'm saying to myself, at some point, this is going to end up bad, because what happens when all the money is spent and there's no more money being pumped into the economy? Where do we go from here? And that's what ended up happening. In 2023, 2024, we started to see these things happen, these things play out, where the money now is evaporated, is gone. And then another thing too, the Fed increased the interest rate because they needed to control everything, right? They felt like, you know what, everything's going extremely well. we need to kind of taper this thing down because money is flowing. The unemployment rate is high, but no one is going back to work because we have all this money that is circulating. And why do people need to work when the money is circulating like it was, right? So the Fed jumped in and they raised interest rates, which caused inflation, and it caused higher cost in what we were buying. And so now you have a situation where if the money's not flowing in and things are not happening, right? And now here's another thing too. We now are not locked into our homes. We now can travel. We now can go outside like we used to do. So guess what? Now that we're able to go outside, we're able to spend our money differently. Now we're able to go to concerts. We're able to go to eat out and go to brunch. We're able to do things that we weren't able to do whenever COVID was happening, right? So because of that, the money is being spent differently. So I'm seeing all this play out and I'm like, you know what? We need to focus our priorities. We need to taper it back to the basics, the foundational things whenever it comes to managing money. And cash reserves is extremely important. We have to have and maintain a healthy cash reserve in our business. The same way that you would maintain a cash reserve in your personal life, you want to maintain cash reserves in your business. And here are 3 reasons why having cash reserves is important. Number 1, unexpected emergencies. If you are an entrepreneur that's been in business for any period of time, you understand, hopefully, that unexpected emergencies will occur. You understand that there'll be times where a customer may not pay you on time. There will be times where you might need to handle something, an unexpected bill. And if you have cash reserves, you're able to handle these things without any issue. You're able to handle these things without any stress, without any angst. You're able to handle these things without going to take out predatory loans that have high interest rates that'll now put you in a worse predicament. So unexpected emergencies will always occur. We need to get it in our brain and in our mind that things will always happen in our business and we need to be prepared for those things. We never knew that COVID was going to happen, but the businesses that had reserves were able to weather the storm for at least a little bit before they were able to get PPP money and all kinds of other money. But what about the businesses that didn't have reserves? A lot of people went out of business during that time. So we need to prioritize building and maintaining 3 to 6 months of cash reserves. Number 2, having cash reserves gives you the opportunity to take advantage of unexpected opportunities. So we spoke about unexpected emergencies, but how about the unexpected opportunities? How about opportunities where you might have a competitor that says, I am going out of business and I need to sell my business, or I'm retiring and I need to sell my business. And you have the cash to actually hop on that opportunity and add that business to your portfolio of businesses that you have. What about the opportunity where you need to buy or invest in equipment to help accelerate the growth of your business and you actually have the money to do so? These are things that it's going to be hard for us to do if we don't have cash reserves, because now what ends up happening is you have to go ask friends and family, you have to raise money, you have to go to the bank, go through that lengthy application process and hope and pray that the money comes to you. But a lot of times in situations like that, it's slow. Going to go raise money is not an overnight thing for many people. Going to the bank to get a loan is not an overnight thing for many people. But having those cash reserves readily available for you to be able to take advantage of these opportunities is something that if you're able to do, I guarantee you 90% or more of your competitors are not doing these things. So that puts you at a huge advantage over your competition. So you want to make sure that you prioritize your cash reserves in situations where unexpected opportunities arise, because they definitely always arise. And then number 3, here's a sleeper one that a lot of people don't really even realize. Whenever you have cash reserves, going to your bank to get a loan is a lot easier. We've had numerous clients that had cash reserves go to the bank and get large amounts of money in the form of a loan or a line of credit at low interest rates because they had cash. One of the big reasons was because they had cash reserves. So as I speak to a lot of people in the banking industry, one of the things that they always say is whenever people come to apply for lending, a lot of times they're on their last dollar. They don't have money put to the side. They're in a messed up situation. So if someone is in a situation where they don't really have anything to offer and they're asking you for money, and how many of us go through this in our everyday life where you might have someone ask you for money and you already know this money that I'm about to give this person is not going to come back, right? Because of, their situation that they're in. The bank, unfortunately, has to protect the money that they're lending out, because the money that they're lending out is whose money? It's our money. The money that we put into our bank accounts every day, they use that to lend out to different entrepreneurs and different people. And so they have to go through all the different checklists and requirements to make sure that the money that they're giving out to, or that they're lending out to people, will actually have a really good opportunity of coming back. So one of the things that they look at is collateral. Does the business that's applying for this loan have collateral? Do they have something that I could potentially take if they were to default on this loan that I'm giving out to them? And one big form of collateral is cash. If you go to the bank and you have cash already, the bank is more likely to lend you money because you are coming to them in a place of, not in a place of need, but in a place of partnership. You're coming to them saying, look, I already have money built. I just need your money to help me grow my business. Not to help me maintain my business, but to help me grow the business that I have, right? So the bank, a lot of times, as they look at that and they look at your credit score and other things, they're more likely to give you money because you're in a better position versus, hey, bank, I only have $50 left in my account and I need this money badly. I need it literally today so I can stay in business. How likely is the bank to give you money in a situation like that? Highly unlikely, because the likelihood of that money being paid back, slim to none a lot of times, right? So it's important to build your cash reserves in these three areas: unexpected opportunities, unexpected emergencies, and lending. Going to the bank to be able to get lending, right? And there's many others, and we'll cover these in future videos, but I wanted to touch on these three and really dive deep into why cash reserves is something that I'm going to be talking about more frequently this coming year, because we need to prioritize this in our business. We need to make sure that we have reserves that we can literally fall back on in the case of emergencies and opportunities. And the bigger companies that are accelerating, the majority of them have this situation, this process figured out, where they're putting money to the side and they're building reserves. And we have to do the same as small businesses if we want to stand a chance of staying in business and growing. All right, talk to you guys soon.